世诚投资创始人兼首席投资官陈家琳。美联储再度暴力加息，中国市场影响几何？深陷能源危机，欧洲宏观环境堪忧，重重迷雾中，中国市场价值如何评估？当下哪些关键经济指标可成为投资者的指路明灯？本期嘉宾将为您一一解答。
And that is a lower correlation of the Chinese market to the rest of the global market. That's a very big advantage in the context of being able to access different kinds of return streams for global investors.
Whether it's a short one or a long one, I think there is a saying, invest in China is risky, and not invest in China represents a bigger risk.
对话全球顶尖机构，换一种思路看中国。
对话全球顶尖机构，换一种思路看中国。大家好，欢迎来到中国基金报独家打造的高端对话节目《巅峰对话》，我是娟娟。随着中国金融市场对外开放进程的推进，外资已经成了我国市场一直不能被忽略的力量。他们通过设立合资公司、设立独资公司以及我们的股票互联互通机制参与中国投资。与此同时呢，我们的中资机构也在积极的扬帆出海，参与全球市场布局。那么在当下这个时点，外资投资中国的思路是什么？中国在他们的资产配置版图中占据什么样的位置？而中资机构出海又能为我们的投资者找来什么样的机遇？今天呢，我们请到了两位嘉宾，一位呢是美国精品投资机构尚博投资的CEO Jason Brady， 另外一位是国内的老牌私募世诚投资的创始人和首席投资官陈家琳，两位会就上述问题展开讨论。家琳总你好，和我们基金报的粉丝朋友们打个招呼吧。
好的，娟娟老师好，咱们基金报的粉丝大家好，我是世诚投资陈家琳。
在和家琳总聊天之前呢，我们先来简单的认识一下世诚投资。世诚投资创立于2007年，它是国内最早的阳光私募之一。陈家琳在创立世诚投资之前，有过多家外资机构和合资机构的工作经验。世诚投资从一开始就拥有国际化的视野。那过去这些年呢，世诚投资的长期业绩非常的优异，也斩获了海内外多项的这个对冲基金的奖项。陈家琳目前担任世诚投资的首席投资官，他也是世诚投资的创始人。那他是一位金融市场的老将，拥有26年的从业经验，同时呢，他也是 CFA 和 CPA 的双持证人。家琳总，谢谢你来参加我们的节目哈。
谢谢。
今年呢，我想对很多的投资者来说都是非常煎熬的一年，可以说煎熬和等待是两个关键词。那我想到了现在这个节点的话，3季度快过完了，快进入4季度了，大家都想问，这种煎熬什么时候能够结束呢？
谢谢娟娟老师的问题啊，我觉得您的这个用的关键词非常的到位，是吧？煎熬和等待啊，我想对于绝大多数靠资产价格上涨来赚钱的投资人而言啊，年初到现在确实是一种煎熬。我们把这个各个大类资产稍微梳理一下，我估计年初到现在上涨的可能只剩下这个原油和美债了，其他的好像都在下跌啊，只是跌幅不等罢了。那么造成这种煎熬啊，或者是很多资产价格下跌的原因是多方面的。在我看来，很重要的一点就是今年或者讲过去这个1年半时间吧，我们遇到的黑天鹅非常的多，是吧？有很多事件了，我们把它称之为叫可能职业生涯里面最多就碰到一次了。你看我们像这个世纪疫情，对吧？然后还有40年以来最高的通胀，当然还有30年以来最大的这个战争。那这些黑天鹅事件叠加在一起，实际上对于各个大类资产，包括我们国内的资本市场，就形成了比较大的一个冲击了。那么国内市场当然还面临其他一些额外的一些因素，包括像在疫情之后啊，我们整体的经济复苏啊，相对还是比较的平稳一些，并没有体现出那个非常强劲、非常有力、非常持续的那种大家预期中的复苏。那么还有一点当然是这股市本身的增量资金到目前看来呢还是比较有限一些。 那么回到刚才问题啊，你说煎熬何时结束，是吧？煎熬何时是个头？那我说关键还是要看这些主要矛盾他们会发生怎样的变化，以及何时会发生这些变化。但是呢，很不幸啊，我觉得这个有些问题我们现在可能还没有特别明确的一个答案。那比如说疫情，我猜可能就是说科学家都没有办法精确预测这个新冠病毒什么时候会从我们地球上消失，是吧？我们世诚投资已经连续2年把疫情以及疫情对经济的影响放在我们的年度策略报告里面，作为最重要的一个风险点去考量这个结果当然不幸严重但我们当然不希望我们过几个月再来写2023年年度策略报告的时候继续把新冠疫情作为一个最大的风险点。但是呢，说老实话，现在确实没有办法预判。那我觉得剩下的可能更多的怎么样去应对了。那另外的话，前面提到就是说像这个战争局部的领域的地缘冲突俄乌冲突，那现在已经是半年有余了。那目前的话呢，还是处在一种焦灼的状态。那我们也没有那个水晶球，也不知道怎么去预测这样一个结果。但是有一点是可以肯定的，就是说你看这个冲突的双方，这个俄乌两国都是大宗商品的一个主要的一个产出国。那么这种冲突以及随后的一些什么制裁其他的一些措施难免会加剧这种阶段性的，或者是说阶段性的会弱化这个相关地区的它的一个经济，包括加剧整个地区甚至是全球的一个通胀压力。当然我们也看到一些比较确定的事情，比如说像这个通胀，对吧？你看我们现在看到美联储已经是痛下杀手了美联储在那个 Jackson Hole 开会，那总体的表述应该是偏鹰派的，那个预示着什么？预示着后续加息的力度也可能超市场的预期。但是无论如何，就是说我们从边际变化的角度来看，我相信美元流动性最紧张的时刻可能已经过去了。那今年余下的时间里面应该还是会有加息，包括缩表。但是呢，我觉得这个紧缩的力度应该来讲下半年不会是超过上半年的。所以从边际的角度我觉得这是一种改善，是一种对股市的这个利好。那好在就是我们有一点比较好的是，我们这边的通胀压力不大，所以宽货币包括流动性的边际的宽松应该还是能够保持。我觉得这个是我们的一个优势。也就是说中国这一边跟美国跟海外它的整个金融周期正好是错位的。这个也是我们的这个优势之一。简而言之我觉得引发这个股市震荡盘整的因素大概就是以上前面提到的这一些。那么最差的时候应该已经是过去了，最煎熬的时刻应该也已经过去了。那后续虽然不见得马上说来一个180度的转弯，我们马上就扶摇直上了，但是这种边际上逐步改善是比较确定的。我说熬过了后面的几个月，我相信不管是年底也好还是明年，我们一定会迎来更好的一个投资的一个窗口期。好吧，谢谢娟娟老师。
讲得非常好也给大家了一些信心虽然说很多的这个引发这个煎熬的这些因素都是我们不可控的因素，但是确实现在在目前这个时点是有望迎来一些边际上的改善的，非常的这个鼓舞人心那接下来呢，我想跟嘉玲总替我们的投资者朋友问个问题就是您在最新的这个研究观点中点出了很多您比较看好的这些赛道。那其实点出的这些赛道呢，说实话有很多也是公认的这个大家都非常看好的赛道所以问题就来了，因为大家这个识别这些赛道，我想大家没有太多的分歧在于什么时候入场，您能帮大家解释一下吗？另外就是比如说像新能源这些赛道，它是一个很宽阔的赛道能不能具体分析一下哪些细分的领域您觉得机会是更大的呢？
对，确实如此。因为这个前面讲到我们宏观流动性总体还是比较的充裕，但是落实到股市层面，目前我们看到整个增量资金不多。因为为什么没有钱流进来？主要还是没有赚钱效应，对吧？你说这个如果是这个指数涨个20%、30%，我想这个资金哗的都流进来了。但是现在的话呢，缺乏赚钱效应，这个意味着就是说一时半会儿可能比较难有那些大的这个指数级别的行情，这个比较难一些。但是呢，结构性的行情一直会有，不管是之前还是今天还是明天， 这种分化的行情持续的会存在。那这里面的话，娟娟老师也提到了，像新能源啊，或者是这个更宽泛的讲啊，就是以能源革命或者是以能源技术革命为代表的这一批先进制造业，我相信应该也是未来结构性行情的一个非常重要的一个方向。那么我们世诚投资也是连续2年把这个跟能源革命相关的这个投资主题列为最重要的一个投资方向。那么去年2021年的话呢，是从安全的角度做这样的考量，那么今年的话呢，是从供给的角度这么去想了。当然年初的时候我们也不知道这后面又有什么俄乌冲突啊，然后又进一步引发了局部的能源危机，但我觉得这些可能都是一个插曲，那我觉得只是局部啊，或者是阶段性的强化了相关的投资机会。那我觉得这个新能源它是真的是一个非常宽泛的一个主题，这里面包括的像新能源车、光伏、风电、储能啊，挺多的，包括还有什么新型电力系统的建设。那我觉得这些都是机会，有的时候甚至还比较难给他们排序，那么只是我们讲阶段性的各有侧重罢了啊。平时我们投资研究啊，如果一定要去做优中选优，那我觉得我们世诚投资自己的时间精力可能花在新能源车啊，花在光伏上面会稍微再更多一些。那么为什么去选择这个大的新能源行业，包括一些细分的领域啊？我觉得最重要的一点是这个背后的逻辑就是供需两旺。当然你看需求侧它是一个全球共振，不单单是就是说我们中国有这样的诉求，其实全球范围大家对于这个新能源其实都有很强的这种诉求。那么供给侧的话呢，我看中国的优秀企业应该来讲是一枝独秀，供需两相结合，就给了我们很好的机会。但是波动确实也很大哦，就是说这些有的时候把它称之为叫什么叫赛道，对吧？赛道股的话，它的波动确实很大。那这里面讲的为什么波动大？因为这里面讲的都是所谓的宏大叙事，大家一看都是看3年5年之后的事情故事，对吧？这个就像类比我们固定收益的话，你会发现越长久期的固定收益资产的话波动越大。那么其实也是一样，我们看这些成长板块的话呢，它的久期也非常长，自然波动也会比较大。那么好消息是我们现在看到中国企业的这个领先优势啊是越来越明显特别是中国在新能源制造领域，那个它不是一个廉价的代名词。以前我们中国讲出口总是讲因为我们便宜所以我们出口很强，但是现在的话呢，中国的新能源领域的这个竞争优势，它实际上是意味着这种技术的持续的更新和领先，包括产品的快速的迭代。而且呢，在主流的新能源领域啊，比如说从电池到光伏组件，中国企业的全球竞争力还在不断的扩大。当然最后我们也会提醒自己就是说好赛道好股票，但是呢我们不能去支付，从投资的角度不能去支付过高的一个估值溢价，对吧？不然的话你再好的公司都没有办法带来一个好的回报。但是什么叫过高的估值，什么叫过高的溢价，这个是见仁见智的，我觉得确实也比较不容易去把握。那么这个时候的话呢，一方面我们自己做好研究，特别是产业研究，另外一头的话呢，多去倾听市场的声音，让市场来给我们答案。
好的讲的也是非常的这个有帮助哈。尽管确实也是一个难题，因为可能入场时机可能跟我们各自的这个资金的性质也有关，我们准备拿多长时间，我们能忍受多大的波动，所以很难一概而论。那接下来呢，我想问一个这个直击灵魂的问题哈，就是今年的话真的非常的难做，我们投资者熟知的非常多的这个公募私募的投资人都遇到了大的挑战，所以我想把这个问题抛给您哈，作为国内这个投资老将，您认为我们的私募或者是说我们的这个广泛的这个基金经理，我们在现在这个时局下，我们应该做哪些调整？有哪些急需改变的思想呀、观念呀、方法？
确实，我在这个市场里面也接近30年的时间，那么在过去的这个半年遇到的挑战，应该来讲印象非常的深刻。我相信我们很多同行也应该有同感那么我觉得怎么样去做出调整？一句话就是要与时俱进。 以快制快，对吧？就这个8个字。那么具体怎么来讲啊？我觉得在技术层面，我们需要去更好的去做这个投研能力啊，投研实力的这种打造和持续的这种磨练啊。你看我们中国的这个转型啊，20年前、10年前可能是房地产，对吧？包括这个出口，但是现在的话呢，我们是往高端制造业在转型。那么这个时候对我们的要求是什么？就是我们在研究上、在投资上要进一步加深对于相关产业和行业的这种理解，深刻的理解，而且要快，对吧？我们中国的特色是什么？大家最近这几年听到最多的一个词就是内卷，卷，对吧？卷的意味着什么？就是变化会非常快，就包括我前面提到的新技术的演进啊，新产品的迭代，都在以更快的速度在发生。那么如何在这种背景下做好投资，其实就是要求我们管理机构、投资管理机构也要足够的快，要跟得上市场的节奏。当然这种快啊，也不是说就意味着我们只是在那边追逐市场的热点。那我觉得我们该坚持的最基本的原则，我们还是要去坚持。那比如说对高质量成长的这个追求，对吧？这个也是我们世诚投资最基本的一个投资理念了。我觉得这里面2层意思啊，一个就是成长，另外的话呢是高质量。那首先是成长，如果说相对于比如说资本回报率啊，或者是增速有限的价值股而言，我们大家都喜欢成长，但是更重要的是什么？更重要，这种成长是要有质量，高质量的成长。高质量现在在这个市场里面，它是一个稀缺品，成长不是稀缺品，高质量稀缺品。你要把这2者结合起来，那才能更好的去抓住市场的机会，同时的话呢，去更好的去管理好风险。那么这个是投资层面，另外一层的话就是在这个资产管理机构的自身的管理层面啊，我们也要这个设计好这个现代企业制度。那我们自身啊也要有一个好的一个治理结构，这样的话呢，才能持续的去获得我们合作伙伴，包括最终这个投资人的这种认可。因为我们自己确实把治理结构看得非常非常的重，投资的时候是这样，那作为一家基金管理公司，我们在自身管理的时候也是如此。
好，说得非常好哈，所以这个我想可能这个市场的机遇，同时也催促我们的资产管理机构在公司治理、在这个人才呀等等方面升级转型哈，所以可能也是给我们的就是逼迫我们的这个资产管理机构走向规范化，走向这个向全球的这种一线的投资机构接轨哈。那最后一个问题呢，我想这个请这个嘉林总简短的帮我们回答一下哈，我想也特别适合您。现在呢，我们看到外资参与中国市场的这个越来越多，那我想听一下您怎么看您的这个外资同行呢？就是他们能为我们的资产管理行业带来哪些变化？
我相信我们的外资同行啊，其实带来很多东西。那首先把钱带来了，是吧？像我们从04年开始，我们引入了这个 QF 的制度，后面又有 RQF， 然后大概是6年前吧，我们有这个互通机制，对吧？特别是北向的这个沪股通啊、深股通啊，这个过去的差不多接近20年时间加在一起的话，流入我们资本市场，单股票市场差不多3万亿人民币。那这些增量资金对于我们这个市场其实当然还是起了很好的一个支撑的作用。那另外的它还带来了比较这个相对成熟市场的这些经验。那我觉得我们 A 股市场啊，哪怕到今天已经发展了30多年时间，它本质上还是一个我们定义为叫新兴加转轨的这么一个市场。那么成熟发达市场的这些经验教训，我相信对我们而言一定也是一个宝贵的财富了。那么大家在一起同台竞技，我觉得这是一种良性循环，它是一种相互的促进，对吧？平时我们世诚投资啊，跟外资同行、外资机构有很多的交流，大家在一起啊，相互的取长补短。那我们希望是一起把中国这个充满朝阳、充满前景的资管行业，大家一起做大做强。那我觉得这个大家有的时候也在想，是不是也引狼入室啊？会不会有更多的竞争啊？那我觉得 竞争现在还谈不上。我们中国的市场啊，不管是我们投资的这个标的市场，还是我们所处的这个行业资管行业，太大了。我们谈论的是一个10万亿级别的一个市场。你说，新进来一些玩家，对吧？虽然现在我们也看到有100亿级的这个外资私募了，但是那也只是在市场里面占很小的一部分。我觉得不会对现有的这个行业格局、竞争格局产生任何根本性的影响。那我觉得反而就是说，这种相互的促进应该是实实在在的。所以的话，其实我们可以看到外资带来很多，也能够更好的促进我们整个资本市场，促进我们整个资管行业的一个良性健康的发展。谢谢。
说得很好哈。作为这个基民，我想基民来说，我也非常希望这个咱们的这个管理人们疯狂的卷起来，为我们的这个投资者朋友带来更多更好的这个策略和产品哈，带来更好的回报。好的，我们先和嘉玲总先聊到这儿。那接下来呢，我们来连线尚博投资的 Jason Brady。在连线 Jason 之前呢，我们先来简单的了解一下尚博投资。尚博投资是美国的一家独立资产管理机构，它成立于1982年，它的总部位于美国新墨西哥州，远离华尔街，使得这家机构可以屏蔽市场噪音，专心研究，专心投资。那尚博投资在股票、固定收益和多资产方面拥有很多杰出的策略，赢得了全球的机构投资者的认可。那 Jason 2016年起开始担任尚博投资的首席执行官。那他不仅是金融市场的一位实力干将，同时呢，他在金融理论、投资方法上面也非常有建树，著有这个专著关于收益投资的专著，在收益投资领域呢也是非常受业内的认可。在加入尚博投资之前呢 ，Jason 曾任职于富达投资和雷曼兄弟这样全球知名的投资机构。Jason, I'm really glad to see you again. First, I want you to say hi to our audience.
Hello, how are you?
Well, great. So, Jason, we also have Charlie Chen online, and he's a founder and CIO of Megatrust, which is a leading long-only private securities fund in China. Charlie has been in the investment industry for over 25 years, and before founding Megatrust, he worked for multiple agencies, including joint ventures, a renowned joint venture fund house in China. And Charlie back then managed the largest QFI fund and delivered a return I believe that very few funds could match. His fund back then managed to gain 550% within a little bit more than 2 years, which is really impressive, I think, even today. Okay, gentlemen, it's really a pleasure to welcome both of you, and especially now amid rising uncertainty, I think we need independent thinkers like you to help us separate signal from noise, and I think which is conducive to sustainable investment return, but also can help us sleep better. So, Jason, let me start with you. So, when we talked last time, we agreed that the market might eventually conclude that Jerome Powell is Paul Volcker in disguise. So, has Jerome Powell peeled off his dovish mask so far?
Well, first, let me say I'm very honored to be on here with Charlie. Evidently, Warren Buffett is the Charlie Chen of the United States, so I'm excited to hear some more from him later. I think that Chair Powell has tried very hard to peel off his dovish mask. Really, what he has is more of a dunce cap. He and the Federal Reserve have been very far behind, and Jackson Hole was an interesting opportunity to give a speech with no questions, whereby Jerome Powell could be very clear that he was committed first and foremost to taming inflation. In the past, the Fed had received, or Chair Powell had received in press conferences, further clarifying questions from the press, and like any reasonably intelligent person, allowed for the possibility of a wide range of futures. That just muddied the message, frankly. So this time they were able to be very specific.
Okay, that's very helpful. So how much do you think the Fed would need to hike for the rest of 2022?
I think the Fed is going to be relatively aggressive for the rest of 2022. Once again, the Fed has done the one thing that policymakers never want to do, which is embarrass themselves. So they really need to make sure that they regain some of the credibility that they've lost. And I think they're in the process of doing that. The real question will come as and if a recession starts to hit the U.S. economy and potentially starts to destabilize the global economy, when and inflation is not yet down to the Fed's 2% target, say that inflation is down at, say, 4 or 4.5%, what will the Fed do then? Will the Fed be able to have regained the credibility such that they can pause or slow at that point? I'm not sure, but that's a ways off.
So do you think the market has priced enough? So the market is behind what Jerome Powell would like to do, or is fully priced?
It's interesting. I think that fixed income markets, and particular direct Fed funds futures markets, they had been pricing in an actual decline in rates towards the end of 2023, and that's being rapidly priced out. And you've seen some of those moves, particularly more recently in treasury markets in the front end, some very aggressive moves to higher yields. What I think is potentially more challenging is other risk assets and other markets. It's very clear from certain members of the Federal Reserve that the Fed's focus on financial conditions is leading them to believe that they'd like to see risk assets lower in price. I think that's a very, very different market environment and backdrop than risk markets have seen in the last decade or so. So I'm more worried about volatility outside of rates markets.
Okay, that's quite helpful. Charlie, do you worry about spillover effects from the U.S. market, the tightening situation?
Oh, yes. I think we Megatrust investment here in Shanghai has also been keeping a very close eye on Fed's moves and the consequences on the market liquidity. But I think in the short term, Chair Powell will remain hawkish because fighting inflation is now the number one thing. But I'm not that worried about any spillover effects for China. As I highlighted in the first session, China is still enjoying a very low inflation environment, which means constraints to monetary policy is rather limited. If you take a look at the 10-year government bond yield, it's coming down quite a lot on China's side, although it's going up in the U.S. So this gap tells a lot. And at the same time, we are seeing a lower correlation between China equity market and the U.S. market. I think this is partly because the domestic equity market is now increasingly dominated by domestic institutions. But on the other hand, I would rather pay more attention to China's export because the global economy, global demand is slowing. So on the back of, and this slowdown is basically a function of the tightened financial conditions. I think China is now increasingly exporting higher tech content stuffs as compared to 10, 20 years ago when those low-end commodities dominated China's export. I think this should help China outgrow the rest of the world on global trade front. And this should in turn help China to keep its currency relatively stable. So in short, I think, yes, we are seeing shrinking liquidity in U.S., but for China, I think the spillover effects should be well contained.
Okay, that's very informative. But you mentioned currency. So what about RMB? Do you think like tightening situation in the United States will add pressure to foreign exchange rate of RMB?
Yeah. You see the dollar index is trading around 110 right now, but that's partly the problem of euro, right? So I think for renminbi, it will fluctuate, but I think it will fluctuate in a range that is quite acceptable for global investors.
And also, I think the market seems to be adjusted or more accustomed to larger fluctuation or from both directions of RMB, because now I don't think the market will went into turmoil if we even break like 7. So previously that would be a psychological point, but now I think the market is better prepared for more fluctuation, right?
Exactly. I think the market or investors just get used to that.
Okay, so Jason, you just mentioned the credibility of the Federal Reserve. So do you think Jerome Powell has fully restored Fed's credibility in the Jackson Hole speech?
I'm not sure we're there yet. I think that the Fed has gone a long way, but they are going to face, in my view, a decision between saving jobs and taming inflation. And that's a very difficult choice. What I will say in what I believe Chair Powell and the Federal Reserve Board will do is just looking back at history. As we've all experienced here in the U.S., higher inflation than we've seen in 40 years, there's been a lot of talk about Arthur Burns, who was a Fed chair in the 70s, as really the last truly failed Fed chair. So since the 70s, we've seen many recessions, but we've only seen now 2 bouts of inflation like this. So I think it's a better path for the Fed's credibility to instigate a recession, if that's required, than to allow inflation to run hot.
What does the Federal Reserve need to do to convince the market that indeed it is first and foremost to go is to rein in inflation?
I think they're a long way to that. I think they've done a good job in doing an about face from a lot of the transitory talk that existed. We might remember 6 to 8 months ago, we still were hearing those words. So there's been some of the most aggressive hiking that we've seen in the Fed's history. Remember, in the last 40 years, we've seen 3 75 basis point hikes and 3 50 basis point hikes in the last 40 years. And 2 of those 5 basis point hikes were the last 2 hikes. So it's actually been quite a bit. It's just a question of when they have to really make some hard choices.
That's very helpful. So, Charlie, we are living in a very difficult time, and I think globally, and in Europe is having the energy crisis, and we have rising inflation in US and Europe, and we have economic slowdown in multiple countries in APAC. So in this rather catastrophic macro environment, what are the pros and cons of allocating to China market? What do you think?
Sure. Yeah, you use the word catastrophic, right? I think it's this word which sounds a bit heavy. I would rather replace it with challenging. Challenging. Yes, we are seeing the mounting pressures in various spaces, from energy crisis to superinflation, and also in various areas from Europe to US. Some economies are obviously more vulnerable, I should say, like some emerging markets with heavy foreign debts or negative trade deficits. China is obviously not on that list, whether it's a short one or a long one. I think there is a saying, invest in China is risky, and not invest in China represents a bigger risk. This is a cliche, but it still works today, I think. Right? Number one, China is a superpower in the making, and on domestic demand front, we have 1.4 billion people, including up to 400 million middle class, which is more than the whole total population in the US, right? So if you win, or if you can win Chinese customers, presumably you have already won half of your target customers on this planet. And another advantage is you don't have to worry much about currency, right? As I was saying, yes, renminbi does fluctuate, but I think it will fluctuate in a more manageable way. And again, it's quite acceptable for global investors. And the third, we have a very deep and broad equity market, a market that represents roughly 100% of the country's GDP, and the market also boasts a very good liquidity, with daily dollar turnover varying from 100 billion US to 150 billion US for a normal trading day. And the last, we have an very increasing number of proactive entrepreneurs who are increasingly shareholder value oriented. So I think in the short term, we do have some clouds, but we do have seen some progress, and that's obviously good news for global investors, who really want to diversify their investments globally.
Okay, that's helpful. Jason, what do you think from your global investors' perspective?
About the attractiveness of investing in China?
Yes, about all the disadvantage.
Well, I think it's one of a number of markets. Obviously, as Charlie points out, it's extremely large economy. From a global investor perspective, yes, there are some challenges, governance being one in our view, but certainly there is a large domestic market. I think one of the biggest advantages to the Chinese market really is something that Charlie mentions, and I wonder if it will continue just as the Chinese market continues to be accessed by global investors, and that is a lower correlation of the Chinese market to the rest of the global market. That's a very big advantage in the context of being able to access different kinds of return streams for global investors. But look, the most an interesting example of that, let's say, is another thing that Charlie mentioned, which is it's very true and very clear that the direction of travel of policymakers at the PBOC and the direction of travel of policymakers at the Fed and other large central banks is very different. So almost certainly you're getting economies moving in different ways with different drivers. Doesn't mean everything is good in China or bad elsewhere or vice versa, but those differences are really valuable for global investors.
Okay, so now is the time when we really want to diversify our portfolio. So, well, yes. Diversification is always important, but now is even more crucial, right? Given what we are facing now.
I think that's right. And the reality is what we see, one thing that investors sometimes can forget, and I understand it's a psychological challenge, but one thing that investors can forget is when prices are lower, the opportunities are better. Most times when we get a price cut, we're happy to see that when we buy something, but it's only in risky assets that when we get a price cut, we feel bad about buying it. But the opportunities are better across many different parts of many markets today than they were even 6-8 months ago.
Okay. Psychologically, in most cases, when share prices crash, you get more panic.
Okay, I'll train myself to be less panic when I see a major market plump next time. Okay, so Charlie, let's get to the U.S. market for a while. And many would argue that earning estimates of U.S. equity has not priced in a recession. So, what do you think of the possibility of severe multiple compression in the U.S. equity market?
Well, I'm not a U.S. market expert, but I do not perceive a recession in the U.S. anytime soon, or even not even in the midterm. Because with further moves by Fed, economy should slow down, definitely. But the resilience is out there. That's the point, and the growth is unlikely to move into a real negative territory. When I say negative territory, I do not just mean any annualized negative GDP growth on a quarterly basis, but rather I refer to broader significant weakness of all economic activities, from substantially lower demand to soaring unemployment. And that's something unlikely in my view. So I just expect a moderate slowdown, not a recession. So based on this base scenario, I think earnings of corporate America may be under pressure. And I guess the downward revision, earnings revision, may be still on the way. But I do not expect a remarkable earnings miss for the next 2 quarters. And the last, on valuation, Juan just mentioned the P multiple, whether it will continue to expand or it will be compressed. I think because how to say that? Yes, the market, the U.S. market is still trading at a premium over its trend. But given the fact that the market has already corrected more than 20%, and so I think further big P multiple compression is rather limited, and that's basically my understanding of the U.S. market.
Okay, that's sound quite bullish. And Jason, do you agree, or you want to debate a bit?
I think that so I'm a bit more worried about recession in the United States than Charlie is. I think that said, I think whenever you're in markets, we have to navigate markets as well as economies, right? And they're not the same. And so as an example, in 2001, the United States had a very, very challenged market, but an economic outcome that was not so bad. Not good, but not so bad. But again, the market was terrible. I would look around and see where bad behavior has been. Where has been frothiness? Where has there been too much enthusiasm? And actually, I see a lot of the bad behavior not in public markets, not in public equity markets or fixed income. It's more in private markets and potentially in things like cryptocurrencies. So for me, I think there's the possibility, maybe even a probability we get a recession. We have a very strong consumer in the United States. We have actually relatively weak, from a balance sheet perspective, corporations. We actually have seen earnings decline in the S&P in several successive quarters. So the question really is, at what point do we see valuation as a good or bad marker? And Charlie is right. There are some elevated valuations in the United States. The trouble is, as I think he would agree, is that valuation is never a good indicator of when to buy and sell in the short term or even the medium term. It is only a good indicator of the likelihood of robust returns in the long term. And we're talking 5 and 10 years out. I think the United States equity market has okay prospects in some cases over the long term, not wonderful. But I do think we will get some form of a mild recession. And I would look towards areas of the market or areas of the economy which have been very overbought and where there's been excess enthusiasm. And that's really more the character of what I expect going forward.
Well,
yes, I agree. I fully agree. So for the U.S. economy as market, I think our audience should rely more on a guy based in New Mexico, right? In the United States, rather than on a guy sitting here in Lujiazui in Shanghai.
Okay, so I see that U.S. portfolio manager and China portfolio manager are trying very hard to reach an agreement. That's really good. We wish more of that happen in politics or in other areas.
Yes, I agree.
Okay, so Jason, I have a follow-up question. Very interestingly, you talked about crypto, and do you see crypto as an indicator of market sentiment?
That is an interesting question, and I would say that the data set on crypto is very poor and very short. Frankly, the data set on markets generally is very poor and very short, even if you have 100 years of data, because there's not that many cycles, right? There's not that many different regimes. So in crypto, the problem is even worse. What's clearly become the case is that movements in crypto are partly an indicator of market sentiment and partly an indicator of market liquidity. Mm-hmm. And I would worry maybe a bit more about the latter than about the former.
Okay, it makes sense. Because it seems to me crypto is rather, the trading is rather concentrated in a few large traders. So, okay. So Jason, in our last, I think it's kind of related to what you just mentioned. In our last interview, you advised your investor to diversify a bit from U.S. tech names. Well, with inflation in the United States probably peaked, do you think it's time to add back positions to the tech names?
Thank you for mentioning that call. I'll say it's better to be lucky than to be good. I think that if inflation is peaking and market expectations of rates are relatively high, remember we've changed expectations of where the Fed funds rate is going to be at the end of this year by hundreds and hundreds of basis points over the course of this year. So it's been a big change. We're definitely getting more towards the end of that sell-off in that sector on a relative basis, maybe not versus on an absolute basis, but on a relative basis. But I would urge investors actually to stick with some of the larger cap names. The tech sector, the NASDAQ 100 is a larger cap. It contains no financials as one example, but it's about half tech, and that's good. It's lots of large names. Names like Microsoft and Google are essentially new utilities in the sector. But there are many names that don't have really great earnings prospects that came to market in a time when investors were clamoring for anything. And I suspect those names will have much, much more trouble. So those are the bad balance sheet I would stay away from.
Okay, still need to be really, really selective. Oh, so Charlie, what do you think of the Chinese ADRs? We see stock price of many Chinese ADRs rebounded upon increasing clarity in auditing issues between China and US. So do you think it's time to add money back to these Chinese ADRs?
Yes, ADRs rebounded recently, partly on progress made by the cooperation on those auditing issues between the U.S. and China. But now, for the time being, I'd like to give myself a bit more time to watch first, because the auditing issue is just one overhang, and now we have the brief framework, but I guess the execution is another thing. And it's not guaranteed that the execution would be 100% okay later on, right? And in addition, we should recognize that ADRs are, the market. This segment is dominated by so-called new economy companies, or more precisely, internet companies, and their earnings outlook remain it remains an uncertainty, as many of them are increasingly affected by beta, that is the macro picture, while their alpha, or the internet bonus, is already gone. But the positive thing is, after rounds of crackdown on those internet platform companies, the government is now turning more positive, and the government is actually encouraging healthier and disciplined development of the sector. And the companies with right strategy, with solid competence, should eventually stand out. And I think that actually represents good investment opportunities. So we are not talking about the whole space, but rather, if you can identify the right candidates, they still represent good investment chances.
Well, you sound still quite cautious, right? Over
that's
this
partly
Chinese,
because of the economy, because those companies are big enough, so they are inevitably affected by the beta, the macro economy.
Okay, it makes sense. Jason, so as a global investor, we are really, so I think our Chinese audience are really interested. So how do you watch or study Chinese economy? What are the indicators you watch in China, and what do the fixed income and equity landscape look like to you at the point?
What I'm watching right now is really policymaker responses to the economic conditions that Charlie mentions vis-a-vis beta, but also really looking at how the PBOC will continue to engage with the economy and what effect that will or will not have on the renminbi. I would agree actually that the current level is very much within a range. The renminbi was actually weaker than this as recently as a couple of years ago. This is not out of line. I will say that the moves have been over the course of the second half of the year, or the last 6 months, I guess, and then really the course of the last several weeks have been fairly significant. So I think we have a moment in the global economy where the two most important policymakers of the Fed and the PBOC are moving in opposite directions. That's not necessarily bad, but it could create some very interesting flow dynamics, and I think it's really important to watch that.
You mentioned how like the regulators or respond to the market or to economic situation. So what do you think of their response so far?
Across the two, I'll say that I think the response by the Fed has been very late and challenging. And I actually think that policymakers getting very involved in equity markets as measures of success is a real mistake. They should focus on the economic outcomes. For the PBOC, I am a global investor, and we are at Thornburg certainly invested in China to include A shares, but as part of a global portfolio. So I'll certainly defer to Charlie. That said, I think that the PBOC is a very, very different set of dynamics. Maybe the biggest challenge that the PBOC has is almost the opposite of the Fed, which is, Charlie has mentioned real strength in production, but also the large number of consumers and transitioning economy, especially in the context of COVID, a transitioning economy from being more led by direct investment to consumer. That's very, very difficult, especially in an economy as large as China. So those are things that I'm certainly watching.
Okay, Charlie, do you have anything to add?
No, that's more than that.
Okay, next I want to get to the real challenge faced by portfolio managers. I think both markets. So Jason, let's start with you. So many portfolio managers haven't managed money in inflationary environment. So do you think this fact is conducive to a more entrenched inflation?
I think that there has been over the course of last year moments where there's been a bit of disbelief. I think there's been a bit of, well, this can't be happening, and so it'll go away from the market, from policymakers, etc. At this point, I'm a little less worried about that. I think that inflation is very much in the consciousness of market participants. What perhaps is maybe yet to be discovered is how long this continues from an inflationary mindset perspective. I don't think it will be entrenched in the context of consumers forever imagining that they'll need to spend 10% or 20% more every year. But I will say that in a business environment, in a market environment, that inflation is real. For Thornburg Investment Management, our data costs, as an example, are rising about 10% this year. So managing companies in that environment, I think, is maybe perhaps something that needs to continue to be adapted to by management teams versus markets, which are generally a bit quicker.
Okay, so lesson learned, but still need to adapt to evolving situation, right? Okay, Charlie, so China does not have the inflation problem so far or at the point. However, the external environment we face varies significantly from 5 years ago. Now we are talking about dual circulation, self-reliance, etc., etc. So what could be the biggest challenge for Chinese portfolio managers in the coming years?
Portfolio managers here in mainland China, they have a lot to do. I would like to make 3 points here. First is, you need to have a global perspective because the economy is more open and the economy is more connected to the rest of the world today. So in many cases, domestic market is driven by those external factors. For example, in the recent trading days, those energy names skyrocketed largely on a deteriorating energy issues in Europe. So those external factors actually do affect the domestic markets much more than ever. And also you need to be fast. The environment is changing very quickly. The corporates are changing very quickly. They are changing at a pace much quicker than you expected. So, and the technology is also evolving pretty fast as well. So you need to move very quickly to grab those investment opportunities. Otherwise, you could easily be left behind. So, and the last, as you are in asset management industry, asset management business, so you should better understand what your clients want and what you can provide in terms of valuation creation for them. So if you can meet your clients' need, if you can solve their problems, I think you have a better chance to survive in this market. I think this is a market full of fierce competition, or in Chinese we call it 内卷, right?
Well, that's very helpful advice. And also I think because China has been the paradise for stock pickers for a long time. So I think lots of portfolio managers are very good at studying company, and they are very good at finding the most profitable stocks. But I think it's fair to say less attention is paid to macro research, right, compared to developed market. So probably, as you just mentioned, global perspective and pay more attention to macro situation is crucial for future success. So I kind of exhausted my question, and I will let you gentlemen take over. Shall I ask each of you ask the other person 2 questions? So Jason, let's start with you. What's your first question for Charlie?
Oh, well, I'm happy to have expert in front of me. So we briefly touched on the consumer of China, for China, and clearly the property sector is undergoing some significant changes. So can you help me understand the PBOC's reaction function, and also should I be worried about this?
Sure. Thank you, Jason, for your question. I'm personally cautious on the property market, frankly speaking. And I think my view is more related to the demographic structure change in China. The population is peaking, so is the property market. Also, if you look at the housing prices to income ratio, that indicator, that reading is one of the highest in the world. But I do not see a crash in property prices. But on the other hand, they are unlikely to move higher or climb further, because the demand, will keep sunlight, aiming amid these micro conditions. And the government also are doing something to manage the risks in this sector. For example, they would like to lower the financial leverage in this sector, and they are taking some measures to bring the leverage down to a more manageable, more sustainable level. And this actually brought a big shock to the sector at initial stage. And now we are seeing some bailout initiatives from central bank PBOC to local governments. And I think they're doing everything to support the developed market, the property developed market right now. But I'm not sure whether, some bailout measures would work at the end of the day. But on the other hand, I do not expect any crisis as well. I would rather to expect a consolidation. A consolidation in property market is well expected, but that takes time. So property has contributed a lot and will continue to contribute significantly to China's overall economic growth. And I think policymakers are doing right things right now. So don't worry too much. But again, you need some time to watch.
Charlie, your question for Jason.
Oh, sure. Yes. I'm still quite interested in what's happening in the U.S. So we actually have talked a lot about the U.S. economy, Fed moves, but again, it seems that the Fed has been behind the curve until very recently, right? So, but for the next 3-6 months, could the Fed overreact? I mean, could they act more aggressively than the market expected? I'm not sure.
Well, we'll see. The biggest problem, well, the Fed has a number of challenges, not just in the economy, but in the way that they have set up their reaction function. So first of all, the Fed has said we're going to be data dependent, but they at least ultimately recognize that every move they make has what's called long and variable lags, which is to say, whatever they do today will start to take effect in the economy maybe 9 months hence. So that's a real problem, right? It's like you're trying to drive a car and you're trying to react to the road that's 2 kilometers in front of you. That's difficult to do.
Yeah.
So I think what the Fed has put itself in a position by saying we're going to be data dependent. They've almost guaranteed that they're going to be behind. So now there's a real question, which you're asking, which is, okay, what if in 9 months there's some probability of a slowdown? Should the Fed be tightening now? Well, the Fed has already said they're data dependent, so they're almost destined to go too high and too low and too high and too low. And not only that, the Fed has said that they're responsive to the market in financial conditions. And the market, as we all know, goes very much too high and too low and too high and too low. So we've created an environment of volatility. Now, will the Fed overreact in the context of tightening more than the market thinks? Well, I think that they will tighten more than the market currently prices. Will the Fed overreact in the context of tightening too much relative to what the economy needs? That's a very difficult question. I think that the Fed will cause a recession, as I said, but I think inflation will take a while to come back significantly towards the Fed's 2% target. So yes, they'll over tighten in the context of an economic slowdown, but I'm not sure that they have any other choice if they're to get inflation under control.
Thank you, Jason. Thank you for your sharing. And I've got another question. You as a U.S.-based global investor. So, Jason, what's your perception of for the emerging markets? Right? Some said that emerging markets are more risky today than 6 months ago. So, as a macro expert, what's your view on those emerging markets? Thank you.
So I think you would agree that the term emerging markets is almost an impossible term. It's the diversity amongst emerging markets is so large, and the individual sort of states of the economy are so significant that it's hard to kind of push everything together and say, oh, it's all emerging markets. I think you're absolutely right that, as an example, China is much less vulnerable to rate pressure from the Federal Reserve. In fact, it may even be beneficial in some cases. I think other countries or economies or markets that are lumped in with that emerging market label are much more vulnerable, and that's really has to do with things like current account balances and ultimately things like stability of the economy. Frankly, I think we've seen a lot of convergence between emerging markets and developed markets, to the point where I actually believe that the UK has some significant problems with their current account, and their new plans to spend their way out of a recession or out of a slowdown could run up against their ability to fund it. But ultimately, if we're talking sort of classically, emerging markets tend to have more trouble with higher rates, mostly again due to liquidity. So thinking about what economies and markets have liquidity challenges. And on the flip side, really pricing in emerging markets is relatively attractive. And so if you look at the various franchises that are available and the prices at which they are available, you will have to endure volatility. Again, thinking broadly about EM, but I actually think it's a fairly interesting place to be, in a place where many global investors are actually quite underinvested. So I have one more question for you, and maybe it's a little bit of a softball, an easy one. But I was doing some research on Megatrust, and you talk about quality companies and sustainability. And at Thornburg, we also have a set of processes and thoughts around quality. I help to manage a global dividend portfolio as an example. But you talk about quality and sustainability, and you talk about it as slightly different in China, particularly around governance. Can you expand on that and help me understand how you think about that?
Yes, the corporate governance is a key element of our in-house fundamental research, and that's why we, to some extent, we call our research due diligence. It's not just the research, but it's due diligence, right? So we should adopt a Chinese version versus a global version of corporate governance to assess companies we analyze. For example, in China, most private enterprises are owned or controlled by a controlling shareholder or a majority shareholder. And in that case, that controlling shareholder is a key for the listed company's governance practice. So we spend a lot of time on people research, trying to identify whether that guy cares about minorities' interest or not. And to do that, we actually spend a lot of time on road talking to those executives, trying to find any clues that are useful to us. So by doing that, we can better protect ourselves.
Okay, that's very helpful, I think. So that's what we have for this session. And next, we are getting to a quick question session. I will present a few quick questions. I expect you gentlemen to answer with short, punchy answers. So shall we start now?
Sure.
Yeah, sure.
Okay. Sure. So what's your top risk to watch for the rest of 2022? Jason?
I'm surprised we haven't seen more blowups. I think markets don't move in a straight line. They're nonlinear. And with all the volatility we've seen, I think the top risk is that you see some major parts of the market that break from liquidity.
Okay. Charlie?
Okay. Externally, geopolitical issues and inflation, and internally, COVID-19.
Okay, lots of risks. So what's your safe haven? Charlie?
We do long only strategy, right? So obviously cash is not safe haven right now. Even we are facing a lot of uncertainties. I still prefer sectors that can continue to enjoy growth momentum. And of course, if there is a supply constraint at the same time, that will be a big plus.
So, probably different degrees of safe haven. Jason?
So I'll give a little longer answer. I disagree. I think cash can have some interesting place, at least in global markets today. Cash is paying you a lot more than it was paying you a year ago in many markets. And as such, I like sort of short duration treasuries. But I also think from a long-only equity perspective, the due diligence that Charlie and I need to do is around pricing power.
Mm-hmm.
Okay.
Exactly.
Pricing power. So has the dollar index peaked, Charlie?
Yeah, trading at 110, I guess the dollar index is trading in topping range. So because I expect that the U.S. 10-year government bond yield has almost peaked as well. So I think dollar is trading around peak topping range, and that's obviously helpful to renminbi exchange rate.
Jason?
Hasn't peaked yet, but we're within shouting distance of it.
Okay. So next we are getting to more human questions. So tell us one lesson you learned that you wish you knew a lot earlier. Jason.
Ooh. I think that let's just say both from a job function as portfolio manager and also just going through life, learning to love the daily grind, learning to love the practice, learning to love doing it every day, as opposed to thinking that's a means to an end. That is the end. The practice and the everyday is why you do the job.
Well, that's quite philosophical. Charlie.
I think there are a lot, I should say, So, but the single largest lesson is, if I knew there were so many lessons in front of me, I would have been more cautious. I think that's the single largest lesson.
Wow, that's like
you always underestimate those risks around you, right? Particularly when you do this investment management business.
Okay. So list the 2 people living or dead you wish you could meet for dinner. Charlie.
Howard Marks.
Wow.
The great trader and the author of Cycle, right? So I think that would give me a chance to learn more about the cycle, everything cycle. You need to respect the cycle. And when you do your investment, when you do your risk management, cycle means a lot.
Jason.
I'll be a little bit more, again, maybe philosophical. I used to study literature in school, and so I would love to meet Shakespeare, an incredible artist and an incredible life. And then I'm terrible at these questions, so I asked my colleagues, and one of them came up with an answer I can't say. I found a better one, which is I'd like to meet my ancestor that decided to move to the United States and ask them questions about why they took that risk. I think would be a fast. I don't know that person's name, how far back they are. My history is a muddle, but I'd like to meet that person and ask them some questions.
Okay, I would say Charlie has more practical goals. You need you need at least a time travel to reach your target person.
Well, I've met Howard Marks and I didn't learn much, so I don't know what to say.
Okay. But you know who is a superstar in China, right?
Yeah, absolutely.
Okay. So top themes to watch in China market for the next decade. Charlie.
I think fundamental wise, we still focus on reform and open up of the economy of the markets. And sector wise, I think consumer sector and those midstream manufacturing sectors with higher tech content will continue to be the focus. And the last thing, aging population is is a mega trend here in China, and the single largest challenge in China is the aging population. That's the single largest challenge for the next 10, 20 years. So in that case, I think healthcare sector is also a good bet. But you need to be more or very selective in this space.
Okay, Jason.
I promise I wrote notes ahead of time, and they're very similar, actually, to what Charlie talks about. So really, first is capital flows and the development of the opening of the economy. The second, and this is something that Charlie's mentioned a couple of times, but really innovation and the pace of innovation, and how that may or may not continue. And then the role of the consumer, particularly in the context of aging demographics. So we're focused on the same thing from very different seats.
Good.
Okay. That's about what we have for today. Thank you, gentlemen. This is wonderful. It's very informative and I learned a lot. So I hope you enjoyed the conversation as much as I do. Thank you very much to you both for your time. Have a good evening, Jason, and have a good day, Charlie. Thank you.
Thank you, Juan.
Thank you so much. It was a real pleasure.
Yeah.
Thank you.